How's it going, guys? It's in the money. I'm going to make this one kind of quick because it's talking about the CPI report that is coming out tomorrow, December 13th at 8:30 Eastern Time. And then the following day, we will get the announcement of what the rate hike will be from the Federal Open Market Committee and Jerome Powell. So I just want to discuss the possible outcomes of the CPI report and what it means for equities and what you can expect, and then my own personal opinion of what might be coming up. So here we're on TradingView, which someone should have told me about this. I knew about TradingView before, but they're awesome. I'm trying to get sponsored by them, honestly, because their charts are just so good. I always use TD Ameritrade, Thinkorswim, but these guys are just, they have everything. It just looks so easy and so good. I'm literally not sponsored. Anyway, so here at the top, we have SPY. I'll move it over. SPY, inflation down here, Fed funds rate, and then the VIX at the bottom. And I'll add some text down there. It's a volatility index. It gauges, it's kind of the fear gauge. It's also the volatility index. It's measuring implied volatility across SPX options. So there's two possible outcomes tomorrow. One is that this trend of inflation decreasing over time continues, and we see a tick down in inflation. What that means is that the Fed funds rate, the rate at which it is increasing, is going to decrease. So the rate at which it increases is going to decrease. It's not going to go down, just the rate at which it is increasing. So that would pretty much 100% confirm that on the 14th, Jerome Powell will, I hope I have that date right. I'll link something in the description and the pinned comment so you can see all the release dates in case I slip up here. But that would confirm pretty much 100% a 50 basis point hike in December for this month. And that would result in a rally for equities because that would mean a less restrictive monetary policy environment. And especially if we see a significant downturn in inflation, you'll see a larger rally in equities. Right now, there might be some priced in for a 50 basis point hike because that's what's to be expected. But if we see a big takedown in inflation, you can expect a larger move to the upside. So the correlation between all these is with the green arrows, right? If inflation ticks down, monetary policy becomes less restrictive, which is good for equities. And I said in my last thesis that it's actually bad for equities, but that's only when the Fed pivots, when they go from raising to decreasing interest rates and decreasing interest rates in response to negative economic data like rising unemployment. Right now, that's not the case. Right now, equities want to be out of a restrictive monetary policy environment. So if we see that move downwards in inflation, we're going to see a decrease in the rate at which Jerome Powell increases interest rates. We will likely see a rally in equities, unless it's already been priced in, but it depends on how big the inflation drop in inflation is, because if it's a big drop in inflation, that means that even future rate hikes will be less, or they might stop completely sooner than expected. So then you'll see a rather large rally. So the smaller the tick down, the less of a rally you're going to see. Now, the alternative is that inflation ticks upwards. And if inflation ticks upwards, there's a small chance that tomorrow's rate hike may be more than the 50 basis points that is expected and priced in. And I think that leaves a lot more room for the downside if that happens, because it's not priced in. Everyone's pricing in 50 basis points. And so you'll see a potential likelihood for an increase, a larger increase, a continuation of this sharp increase in interest rates because of this increase in inflation, which will result in a downturn in equities. And you can see all this anticipation is building up a little bit in the VIX as it rises. And this is just showing anticipation of volatility. So that's what to expect. I think it's more likely that we'll see a little bit of a rally, especially if inflation ticks down pretty hard, just because of how quick and restrictive Jerome Powell has been in raising interest rates. Not that he responded quickly, but that when he started responding, he was not hesitant in increasing them quite dramatically. At his last speech, however, he had some pretty soft talk about raising interest rates, which might reduce inflationary expectations, which can have some upward push on inflation. But besides that, I would lean more towards a rally in equities than I would a decline. However, if inflation does pop up, you're going to see a much larger decline than you would a rally, in my opinion anyways, because we're pricing in 50 basis points. And if things go, oh, never mind, psych, it's going to be 75 basis points, then you might see a rather large decline in equities. So mostly I just wanted to point out why CPI is important, how it correlates with inflation and the interest rates, and why the VIX is rising, and just, something to look out for tomorrow, and maybe give you some ideas to ping around in your head. Again, I'd lean towards a rally. I think there's a higher probability that inflation is ticking down and we see a rally. But it can go either way. And the third option is that it's a rather neutral reading, and we stick with our 50 basis points, and there's not much of a rally or decline at all, because even though we stick with our 50 basis points, which is a less restrictive monetary policy, we're not seeing a huge decline in inflation, which would imply a softening of monetary policy in the future. And so, it's kind of what we all expected. So there's not going to be a whole lot of movement. There might be a lot of movement, but it'll settle out, probably not far from where it started, if we see more neutral reading in inflation. So yeah, those are all the correlations. That's what's to look out for. And it's 8:30 tomorrow, 12:13. And yeah, keep your eyes peeled. Love each and every one of you in a special and unique way. And because this is such a quick video that I'm putting out there, the thumbnail is going to be absolute trash, and I'm very sorry for that. All right, take care. Love you. Peace.